Hi,
Here
Michael.
we
This is
go. I
Samir.
think we've got everything turned off. Sorry, I think that was my own music that was playing in the background, and I thought it was coming from the Zoom speaker, so I apologize for that for everyone. Guys, I hope everybody is excited to be here tonight. I know I'm fired up. I see the numbers just keep on climbing. We're a little over 913 people on the call right now, so that makes me super pumped and super excited to see that we had everybody that excited to hear from Manulife tonight. Main thing, guys, that I always like to still always reinforce, obviously every single time, is to really think about our philosophies. Still, every single time that we have a wonderful product provider like Manulife on the call, is again, think about exactly how our three philosophies are working. So in terms of our multi-handed concept, thinking about three rules, three goals, and obviously, that bottom one being self-improvement. And, when we think self-improvement, oftentimes, we're obviously thinking about, just our conventions. But the other part of it as well is think about it as your own, as improving your own personal craft. So again, today, like the topic is going to be learning everything about Manulife's products. So again, before we're actually able to be licensed to actually, be selling their products, they've got a course that we've got to go through in terms of making sure that we fully understand what it is that we're presenting to our clients. But yeah, with that, I'm going to turn the call over to Samir. Samir, you're able, to do a brief introduction for yourself and obviously to introduce the team here as well. And then, yeah, then other than that, I'm hoping that everyone, you've got your pen and paper because as they're going to mention, there is going to be a test at the end of this in terms of what's required to finalize your registration. So I hope you all take very good notes. This is going to be my third time going through this course as well. So if I can't pass the test today, I guess I've got some problems myself here as well. But I hope everybody enjoys the session today. And yes, Samir, go ahead and take over from here.
Thanks, Michael, and thank you so much, and welcome. Welcome to this edition of Manulife Contracting webinar. And then we are equally excited and pumped up. So Michael, congrats. We touched the 1,000 mark. So we have like 1,000 plus people on this call, which is awesome. And like I said, this is the start. This is the stepping point when you talk about Manulife, life insurance and living benefits, and even sec funds. So this is the entry point where everybody has to go through this 90-minute webinar, followed by a quiz. So my humble request is do not leave in between. Please attend the complete webinar, and I'm going to post a link for the quiz, which everybody has to attempt the quiz. You have to pass, you have to score 160. And the good news is that you can try multiple times. It is not that you just try once, and if you don't get 160, you don't get the certification. So you can try multiple times, but it has to be done today. Fair? So I have on this call, I have a great set of team members, starting with Tony Speranza, who will walk you through the 90-minute Vitality workshop. And we will also give you an overview on our products, which we are bringing to the WFG platform. And also I have a team member, Sean Lal, who's based in BC. He's the internal wholesaler, and he's will be helping us with all the Q&A questions on the chat. But this is not a very in-depth, probably, how to put this, not an in-depth on the product side. This will give you an overview of the products, but the certification is critical. So please ensure that you're here for the next 90 minutes, clear the quiz, and then we will start the process of your selling code. And once you have your selling code, then you have good to go. You have access to all the life insurance living benefits products, and you will also have access to our Manulife Sec Funds. So enough said, over to you, Tony. Thank you.
Awesome. Thank you so much, Samir. Appreciate it. Thanks so much for the turnout. We always know Raja's hierarchies extremely strong, so to hit over this 1,000 mark is massive, and very much looking forward to seeing everybody in Edmonton in a few weeks' time, and we'll kick along here. So just to kind of echo what Samir was saying. This is CE credited as well, so there are 1.75 CE credits. So that's why your attendance is mandatory for 90% of this webinar, and then completing that quiz in order to get your contract. So with that, we'll kick it off here, guys. So, please take a screenshot or a picture, jot down some of our contact details. So, I'm supporting all of Eastern Canada here with WFG. Really excited to be working with everybody. Sean Lall, of course, on the call, taking care of our Q&A. We won't be taking any questions over the webinar, so please throw those in the chat box, and Sean will take care of those as we go along. Tarek El Ali is based in Calgary. He's your external wholesaler for the investment side. So, when questions come up about universal life, which we'll touch upon today, looking at some of the investment opportunities, Tarek and Stephen, his internal partner, will be the ones to guide you along from the investment opportunities there as well. So as Samir said, it's not going to be an in-depth product training on Manulife insurance. We're really going to do basically a high-level overview, looking at Manulife, the differentiation, and why Manulife, why our platform, and we're focusing on the insurance products here. So it's really kind of a taste test of the full menu. And as we're going to be reviewing this at a high level, where we are different with the insurance choices that you currently have, don't worry about trying to figure it out all on your own. We know your insurance advisors, you know what you're doing, you know how to sell insurance, of course. But it's really just trying to help you navigate and narrow down options from good, better, and best. We want you to feel confident when you're looking at Manulife and the suggestions for your client, and really to make sense of it all. So with that being said, needs analysis, very important part of the application process with Manulife Insurance. As WFG advisors, we do require needs analysis to be completed when you are submitting the application. We have this tool called InsureRight, which is an open website. Anybody can go onto it. You can do your FNA there from the needs analysis standpoint. You don't need to use our InsureRight. Please use your own independent FNA software if you have one, but you can certainly utilize this needs analysis tool. Of course, the reason why letter, which is a CLHIA guideline that went into place as part of compliance back in July of 2018, just providing that summary, helping your clients understand product recommendations, transactions, and reasons why the product was purchased, essentially. There, in our advisor portal, we have a great template that you can utilize. You can also upload your own as well. So really, let's kick it off here. So Manulife Vitality for All. So, we as a company, we really do believe that everyone should have access to our Vitality. But it's really important that you get a better understanding, see what we're doing, understand the program, and we'll really spend some time today just kind of reviewing that as well. Yeah, in this being said, part of our mission here at Manulife is to make decisions easier and lives better. And our approach to behavioral insurance is one that's really rooted in a shared value. We are focused on preventative actions, delivering better health outcomes for customers, saving them money, and rewarding them for those healthy behaviors as well. And we do consider insurance to be that ultimate shared value industry. By helping improve health, extend life, and reverse chronic diseases, we can generate economic value in a way that also produces value for society by addressing its challenges. We also believe life insurers are uniquely positioned to respond to these needs by having more meaningful and engaging relationships with our customers. And this is that perspective that led us to launch Vitality. And this combines life insurance with a technology enabled program offering education, support, incentives, and rewards designed to help customers live longer, healthier lives. So really today there's four risk factors. We have poor diet, physical inactivity, tobacco use, and excess alcohol intake. These are resulting in four chronic diseases. You can see cardiovascular disease, diabetes, chronic lung disease, and various cancers. And these are causing 60% of deaths worldwide. So you may ask, why shared value insurance? Why is it important for me? So today we really have a unique opportunity to grow the business, transform client relationships, but really most importantly, improve and even save people's lives. And to really understand why a shared value approach is the direction our industry is going, it's really important to understand key trends and outside forces that are influencing modern insurance, from product design to operations, even down to selling. So, one is that the actual nature of risk is changing. Another is the profound effect technology is having on risk. And then also understanding that there's now a social responsibility that's expected of companies really to have for the world and the communities in which they serve. So, as I mentioned, that nature of risk is changing. And normally we aren't dying from communicable diseases, with the exception, of, I guess, of the COVID-19 pandemic. But what we are seeing are deaths caused by those lifestyle choices. And together, these are leading to those chronic diseases, again, leading to 60% of the deaths worldwide. So the simple response to this is, well, we should make better choices. So, yes, that's true, but it isn't that simple, and human behavior is quite complicated. I always relate this to New Year's resolutions that may never be delivered upon. January 15th, we've probably, broken 5 or 6 of the resolutions that we've made. So the questions we do need to ask is, how do we nudge ourselves to make those better choices in the here and now? And, necessarily, I know coming out of COVID, we can't deny the profound impact of technology. Look at us today, over 1,000 people on a webinar across the country. We're talking about insurance, getting people contracted. The way we live is changing, and we're always readily connected, and the products we consume are ones that are interactive, relevant, and personalized to me, to you, and to us as individuals. So let's take Netflix for example. I don't know if you've ever turned on a TV at a Airbnb or another friend's house, and it had someone else's Netflix on there, and it's kind of a wild experience for you. Probably it looks nothing like what you're used to, because what you are used to is personalized to you, your likes, and your experiences. So consumers are expecting more curated, personalized, and interactive experiences from the products that they buy. But insurance has always been more of an invisible product. Fundamentally, it's a promise that is delivered on in the future, but technology can really help us bring insurance to the forefront in the here and now as well. So we also have a social responsibility that is expected of companies, and a lot of large organizations are making this shift to be more socially conscious, and it impacts how they do business. Even at Manulife, we have what's called the impact agenda. And through this impact agenda, we are staying true to our mission in three interconnected ways. First one, empowering health and well-being to support the journey towards a better life. Number two, driving inclusive economic opportunities, creating a more even playing field for all. And then lastly, we're accelerating a sustainable future to preserve the planet that we all share. And this work drives what we do as a company in that mission to make decisions easier and lives made better. So, one way we're working with these three trends is bringing vitality to the forefront of what we do as an organization. But it's important to understand who Vitality is and that we have the exclusive partnership with them for life insurance here in Canada with Manulife Vitality. We do also have a similar relationship in the United States with John Hancock Vitality. And Vitality operates in these exclusive relationships in over 41 different markets worldwide, and they have over 42 million members globally. So these exclusive partnerships mean that when a company partners with Vitality in a certain market, let's say Canada, then no other carriers can partner with them. And I share this for three simple reasons. The first one is to show the scale of what Vitality is doing globally. Secondly, highlighting how insurance is being sold across the world. But most importantly, it's really to emphasize that while it is a fairly new concept here in Canada and the US, it's not a new concept in the world, and it is a solution readily available in many other global markets, as you can see here. So let's try to bring Vitality to life today. But to start off, we really need to understand the why and how Vitality works. And Manulife Vitality operates in what's often referred to as this virtuous circle or a cycle. So when clients take steps to live longer, healthier lives, we're going to see health results improve. And that's really good for us as an insurer. We obviously benefit if people are healthier and live longer, but where this really comes to life is that we return the value back to the customer, whether it's through premium savings and other benefits. These are going to act as incentives, enablers for the customer to then take further steps to live longer and healthier lives, which drives that circle around and around. And that's what we often refer to as that shared value. But it doesn't really stop there. There's also a secondary circle at play, one that's going to impact you, the advisor, and bring you into that value proposition. So when the customer receives that value back, it will drive increased customer satisfaction, leading to greater referrals, more customer retention if they're happier, which in turn increases those number of customers that are contributing to the healthy steps and that are driving that primary circle. So really these two act as really complementary gears in the system, providing value to the consumer, to the advisor, and to Manulife. So as well, this together with that shifting mindset of consumers is why we have been seeing success with Manulife Vitality and this shared value insurance. Consumers are looking for insurance carriers to be more than just that product provider, doing more than simply providing a benefit upon claim. They are looking for that insurer to play a more active role and partnering with them to manage their risk. So as I did mention earlier, this shared value insurance, it's not necessarily a new concept to the insurance industry as a whole. It's just life insurance has been a little bit slower to adapt. There are really several examples where shared value insurance already plays a role in everyday Canadian lives, including some of you on this webinar. You know, we see it with auto insurance where there's discounts provided to safe drivers, with some individual health and dental plans. But probably the most well known example is homeowners insurance, where we, have come to expect discounts if we have home security systems, smart doorbells, and other smart home tech. This has become, common sense to all of us, but that wasn't necessarily always the case. So why are you asking, why does this work for life insurance? So let's have a look at more of the traditional policy experience that we have today. So, you know, generally a traditional policy experience is not going to be a great one for their clients. They're receiving the policy from you, they put it away in a drawer or they're safe. They get a premium notice every year, they're making their premium payments, and then they repeat this process until one of two ideal outcomes comes to play. So either the first one is they die and death benefit is paid out to the beneficiaries. Now, them dying is not an ideal outcome, but it is an important one to acknowledge. Or B, let's say if it was a term policy, they've outlived the coverage, paid that premium, and they receive no benefit. So I don't want to diminish the importance of the financial peace of mind that term insurance provides. It's incredibly valuable. But again, this is another difficult ideal outcome. So what if we tried to evolve that experience a little bit more for the client? And we'll have one that focuses on the client while they're living by providing them with these health insights and support, some tools to help them live a healthier lifestyle, giving them rewards and incentives when they do it. But most importantly, also providing premium discounts and control over their policy's performance. And this is what Manulife Vitality is all about. But most importantly, another reason we know it is working is because everyday clients are telling us that it does. So there's a lot of information on the slide, but really the most important takeaways would be members are participating and staying engaged in the program. Members are much more satisfied with their insurance compared to non-vitality. And in this green box here, you can see some phenomenal statistics where members are seeing real improvements in their health right now in just 1 year's time. So I hope it's a little more clear how Manulife Vitality is indeed that virtuous circle providing value to all of those involved. So there's value to the clients, to the advisors and business practices that you all support, and to Manulife. And that's what that shared value can really do for us. So let's take a look at how this works alongside a personal insurance. So with Vitality, we offer two separate programs. We have Vitality Go, which is our free version of the program, and it's included on all of our eligible policies. So those would be Family Term, which is just term insurance, Manulife Par, Manulife Universal Life, and our Manulife Guaranteed Issue Life. So with no charge, there is a little smaller basket of rewards than our Vitality Plus. Clients still have access to the app, healthy living tips, resources, some milestone rewards as well. And it's offered on all single life policies. Insureds need to be at least 18 years at time of issue, and there's no minimum face amount required. So Vitality Go is not mentioned anywhere, not in the product illustration, the contract, or the statements that your clients receive. They will receive a welcome letter or an email with their policy that is inviting them to register for Vitality Go and providing that option to upgrade to Vitality Plus. So what is Vitality Plus? So this is going to offer a much more improved program feature design, premium discounts and rewards for living healthy for a low monthly fee. So regarding the face amounts for term insurance, it's going to be 250,000. For Manulife Universal Life, it would be $100,000 face amount. And how this works. So at the start of each member's program year, they're going to complete what's called a vitality health review. And this helps members to know their health, basically what they're doing right and where there's some areas for improvement. They're also going to learn what's called their vitality age. So this is a calculation of their biological age, not based on their date of birth. And it's based on their overall health. So throughout the course of the year, members are earning vitality points for completing simple health related activities like walking, getting regular checkups like the dentist, getting an annual flu shot, going for workouts. And if they choose, the members can also get a free health screening to improve their knowledge of overall health, and they'll also earn some valuable vitality points along the way. Based on their engagement in the program, the more points they earn, it improves their vitality status of bronze, silver, gold, or platinum. The higher their status, the greater the potential premium savings that they can earn and more rewards that they can enjoy. So, how easy is it to earn points? Really, to put it into perspective, there's over 18,000 points that are up for grabs that a member can earn each year. We've had some information lately where actually an advisor out in Halifax um, completed over 22,000 points throughout the course of the year. So, based on your healthy living activities or trying to get more healthy, great opportunity there. And then at the end of the Vitality program year, the member's vitality status is going to determine their insurance premium. So we start off automatically with a 10% cost of insurance savings. If they're very engaged and they get 10,000, that'll increase to 15% discount there. And with Manulife Par, it is going to be a little bit different where there is no premium discount of 10%. However, there is an opportunity with our pay 10, pay 20, or pay to age 90 that there is an opportunity to earn a vitality dividend based on their vitality status. So, like regular dividends, vitality dividends are not guaranteed. And I do want to point out the cost structure with term in UL, it was $6 per month. With Vitality, it will range based on the premium duration for that client as well. So I've actually been illustrating quite a bit with Manulife Par with Vitality Plus. And I do get a lot of responses from advisors saying, why are you putting on Vitality Plus? It may be really difficult or unreasonable for a client to achieve a status of platinum or even gold for 10 years in a row. So I always like to remind them that, just assuming that the client has zero participation could be just as unreasonable. And, maybe there's a comfort zone somewhere in the middle. Let's say if someone's doing a pay for 20, maybe they can be, you know, gold for 10 years and bronze for the rest. Or if they're doing a pay to age 90, maybe gold for 20 years and then bronze thereafter. So it's you'll see with the opportunity when you're working out illustrations, potential for dividends there as well, where we can see that nice percentage increase in the death benefit from vitality with non-vitality insurance policies there. So how do your clients unlock a lot of these rewards and benefits? Well, it's quite simple. Clients are earning vitality points for the everyday things that they're already doing to stay or become healthy or inspired to do more. Those points earn them that vitality status. Higher the status, the greater the potential for the rewards and that policy impact as well. Just want to quickly review some of the partnerships that we have from a reward standpoint. So, whether it's Vitality Plus or Vitality Go, clients are going to have the opportunity to receive a free Garmin or Fitbit wearable device. We have some fantastic savings on Expedia where you can save up to 50%. 25% off an annual Good Life membership, some great savings opportunities on Adidas apparel, just to mention a few. Exam one is that Vitality Health Review, where it's a $120 value that's included within Vitality Plus, where a nurse will come to the client's home or office to conduct that paramedical testing for some valuable Vitality points there. As you can see on the bottom there, some of the rewards that could be earned for Silver Vitality status, how many clients are claiming those devices, and the satisfaction levels of Manulife Vitality as well. So the Vitality charge, I know, term and UL, $72 a year, $6 a month. Um, I get a lot of pushback sometimes about the extra cost, but I always point everybody to the reward simulator to see what you could get. Spinning the wheel, as you can see on the mobile device there, as you get more engaged within the program, doing a lot of those tasks on the app, you can spin the wheel and earn some valuable gift cards and other rewards there. But I will focus on the left-hand side here and the annual membership. So I've got five of these on this list right here. I enjoy going to Starbucks. I'm not getting a latte all the time, but my venti americano certainly racks up every few days there. So if you can sacrifice maybe one Starbucks grande a week there, it's certainly going to cover the cost of the Vitality charge there for the month as well. So some certain rewards and benefits that the clients can definitely get out of the Vitality status there. So why do you want to look at Manulife Vitality? So those clients that, are looking to live longer, healthier, better lives. I'll also say this, if you're working with a client on a term or UL case and, maybe they've got 20 pounds to lose, or maybe they're a smoker looking to become a non-smoker, that can have some great policy impact there as well and, get that client motivated. We don't need you know, triathletes as the only client that you're looking to focus on with Vitality. It could be those clients that are looking to start improving their health and nutrition as well. So enough about Vitality. Let's talk about the products today. So let's look at the product shelf at a higher level, one by one. We'll start off with our Manulife term insurance. As I said at the beginning of the call, everyone's, qualified insurance advisors, where to sell each product, when to sell each product. So I'm not going to focus on, why term is great for mortgage and debt coverage or collateral, estate planning. Today, we really want to focus on some of the advantages that Manulife can certainly offer as well. We'll look at combined coverage, some of the valuable riders that we have. We couldn't include all of them in this presentation. More of a unique layering advantage, and then some fantastic conversion options for clients as well. And really to start off, we've got four different structures: T10, T20, T65, and then term life. As you can see here, we've got the issue ages, and then we also have different coverage options. So you'll see single and combined from T10 to T65, which I'll explain in our next slide here. And then we also have term life that goes for single, joint first, and joint last to die. You can see the coverage ages as far as the expiries, and then the minimum coverage amounts that we have available there as well. So our combined coverage. So this is fairly unique to Manulife. Where some of the competitors may offer a joint first to die, joint last to die term policy, we did want to come up with a little bit of a better solution. So our combined coverage is giving the same protection as two single life policies, but at a 3% discount monthly or 10% if it's annually. After the first death occurs, coverage will continue automatically for the remaining insured at the original age rate, just minus that discount that we've applied for the premium as a combined feature. And as I said, combined is available on T10, T20, and T65, and will end at the policy anniversary closest to 80th birthday for T10 and T20, or the 65th birthday within T65 of that oldest person insured. So really great feature that you can offer some of your joint cases there. Yearly renewable term rates, really trying to give your clients more choice at that first renewal point. So, we all know traditional term structures after the 10th coverage anniversary, you could see anywhere from a 250 to 600% increase for the next 10 years. So this could certainly be a great alternative if you're looking at clients that don't necessarily need a T20. I think of a lot of business owners in these cases where they've got a shorter timeline as far as the benefit. It's going to exceed that 10th year, but maybe they only need coverage for 12 to 14 years. So it might be a great cost alternative structure as opposed to a T20 instead there as well. And here at Manulife, we believe in flexibility. So we really do have some of the best change options in the industry, giving your clients the flexibility to change coverage to meet their changing needs. So with a qualifying term with a minimum face amount of 500,000, this can be changed to a new term with Vitality Plus policy up to the fifth coverage anniversary with no additional underwriting required. As well, up to the fifth coverage anniversary, a T10 can be changed to a T20 or a T65. A T20 can be changed to a T65. And additionally, T10 and T20 can be changed to term life up to the policy anniversary nearest the insured person's 75th birthday. And then lastly, T65 can be changed to term life up to the policy anniversary nearest that insured person's 60th birthday. A lot of information there, of course, but most importantly, clients have a lot of flexibility to make those changes. Specifically in those fifth coverage up to that fifth coverage anniversary there as well. Our guaranteed insurability option. These are offered ages 18 to 45, and this can be added at or after policy issue. 25,000 minimum coverage up to the lesser of that 250,000 or the total amount of insurance provided by all insurance coverages in effect on the insured. This is available to clients who are a standard risk or better. The rates will remain level, and there's option dates, as you can see here, the second to the fifth policy anniversary or a life-altering event. Business Value Protection Rider, or BVP. So paying capital gains taxes, business debt, funding buy sell, business planning priorities that increase in size as the business grows. But it can be difficult to figure out how much insurance will be required in the future. And there's also a risk that the owner may not be eligible for additional insurance when that need arises. With the Business Value Protection Rider, it's specifically designed to meet this need. The rider gives the business owner the option to purchase additional coverage without any medical evidence based on the increased value of the business, giving flexibility to increase coverage only as needed. And it can also be used to increase an individual's insurance if their share of the fair market value of the business increases. The maximum option amount at issue is the maximum amount of insurance that may be purchased over the 10 option dates. Rates will be lower than a typical guaranteed insurability option because the rider can only be exercised if the business increases in value, really eliminating anti-selection behavior that exists with more typical guaranteed insurability riders. Child protection rider, great opportunity here. This is quite unique in the industry and really is a rider that sells itself. So main features: purchase from 15 days to 18 years, $10,000 death benefit, just $2.50 a month per child. But most importantly, you can protect that client's child now and guarantee coverage in the future for their own coverage, regardless of future health. So the client has the ability, when they fall off of the CPR as of age 25, they have the ability to apply for their own insurance up to 250,000. They could have 100,000 in critical illness. There's two or three questions that they have to answer there, and there's no evidence of insurability required on the life side of it. So great opportunity where you can offer that child some death benefit, and then look at offering them their own coverage without any medical underwriting requirements there. And really, just a final thought on term. This is, focusing a little bit more on our partial conversions with a carryover. So great opportunity here at Manulife. Our term insurance is either fully convertible. You can do partial conversions, or we can look at a partial conversion with a carryover. So this is looking at, let's say I have $1 million of term life. I want to get $500,000 in a new policy. I can spread that out if I want to have 250,000 in permanent, 250,000 in a term insurance rider, and I can keep my existing 500,000 there as well. Great opportunity where the client has that flexibility as needs change. They will not be required to complete that underwriting, even when they're exercising this partial conversion with a carryover scenario. Insureds will receive current age entry level rates on their new term rider when they carry it over. Most importantly for you all advisors, when you're looking at conversions, permanent sales will pay you full compensation. So I know it's just a really high level overview on conversions, but we do go more in depth in future webinars. Also, it's worth mentioning that when converting a policy to a Manulife PAR, clients will automatically receive a lifetime deposit option. They can have deposit option without any underwriting whatsoever. Okay, so let's look at a little bit of a layering strategy. So we've got Susie. She's a single mother, finished grad school, starting out in her first corporate job, wants to ensure that there's coverage for her daughter if something ever happened to her. She is trying to balance the cost of insurance, paying down student debts, paying down mortgages. So what's a great feature of Manulife Term that it is a great fit for Susie? So really it's this layering, breaking up the insurance amounts into separate costs, lowering that total cost of insurance compared to that one single layer. So, let's look at an example. You know, Traditionally, let's say she's got $100,000 of short-term debt. Let's say she's got a $500,000 mortgage and she's looking for about $400,000 in income protection for her daughter. So, you're thinking single layer of term coverage, probably a T65, let's say, and maybe we want $1 million of total coverage there, right? So higher cost of insurance more than likely. What if we looked at it a little bit differently and we structure, let's look at a T65 for the 400,000. Let's look at a T20 in the same coverage for 500,000. And then let's look at a T10 for the remaining 100,000, all within one policy there where the term will fall off after that 10 years, the T20 will fall off, and then they can keep that T65. Or alternatively, you could also look at conversion opportunities along the way there with the T10 and the T20, of course, there. So great opportunity for breaking up that cost of insurance for what the client needs in those specific periods. So again, free version, Vitality Go, not mentioned anywhere, no face amount requirements, single life up to age 18. With Vitality Plus, minimum face amount is 250K. Again, single life, 18 at time of issue. And the client will receive that 10% cost of insurance savings automatically in the first year. Again, we do charge that $6 per month or $72 annually. Do quickly want to bring up a great offer that we have for our advisors. So once contracted, if you're in need of additional insurance, if you yourself want to, participate in Vitality Plus, get a term policy, minimum face amount is 250K. Our advisor offer is we do a 1-year age setback and we waive the Vitality Plus fee for as long as you have the policy. So a really great way for you to try it out on your own, but also be kind of an advocate when you're discussing it with your clients as well there. So let's look at our first permanent product, which is Manulife Universal Life. So again, not really going to focus on the great four. Really want to focus on the Manulife advantages that we have available for you here, of course. So, firstly, minimum face amount 25,000, giving those clients that permanent insurance option for the budget conscious client. Great for small conversions or exercising those guaranteed insurability option riders. There's over 60 plus options, whether it's from GICs, managed accounts, and then we also have the more set it and forget it investor profile. 15 asset allocation, Canadian balanced investment options. That's our Performax Gold investment fund account. So we'll talk a little bit more about that in a couple moments here. Some of the key product features, single life, joint last to die, premiums to last death, pay level to age 100. Again, we also have YRT to age 85 or for 20 years, whichever is the greater. Investment options. So whether you want the hands-on approach where you and the client are selecting investment allocations or the hands-off with our Performax Gold. Hands-on, you're going to get an enhancement. Hands-off, you're going to have a guarantee there. You'll see on the riders T10, T20, and child protection. Do want to advise that we do not offer a critical illness rider within our life insurance there. We have a fantastic standalone CI, which we're going to talk a little bit more about later on. So get to know the rate enhancement. So with our equity and balanced accounts on the managed side, we're offering a 1% bonus, 0.25% on all of our bond accounts. And this starts immediately. There's no minimum requirements. It is contractually guaranteed, and there's no UL management fees on these accounts. So it really does, give you a great opportunity to show a higher illustrated rate when you may be comparing us against some of our competitors. Um, Great opportunity there. We're working with a lot of the same investment firms that you may be utilizing, whether it's Dynamic or Fidelity. Great opportunities with Mackenzie there as well, and then of course, all the Manulife specific funds there, of course. The Performax Gold Investment Fund, really a great opportunity compared to other offerings in the marketplace. And it gives the client the ability to access more of a whole life fund within a universal life product. So the Performax Gold Fund, it is a balanced fund made up of 60% fixed, 40% equities, and this is managed by Manulife's investment professionals. We also do have a 5-year smooth yield. So this fund provides stable returns, low volatility, without giving up on that upside potential as well. And if you are interested in finding a little bit more information about it, we do have some great marketing materials on the portal. Um, the fund has been in effect since late 2008, early 2009, and we can see some of the historical smooth yield. The highest was back in 2011 at 5.5. The lowest was in 2015 at 3.87, which makes sense with that 5-year smooth rule. And standard deviation is quite small, and there's a proven track record. So we also announced recently the rate is as of 4.67. You'll see more updated marketing materials there, of course, as well. And in the history of the fund over the last, 16 years, the lowest net credited rate within a Manulife UL contract would have been 2.37 in 2015. So that's the 3.87 less the 1.5 management fee there. So still a very strong return for those who are more averse to risk and prefer more of that hands-off approach. Some of the things to note, there is guaranteed upside potential. The contract states that the effective annual interest rate is based on the yield of the Performax Gold Fund, less our fee. The UL fee of 1.5% is quite competitive and guaranteed. Other mutual fund managers charge MERs upwards of 2%, and there's no protection against volatility or minimum return guarantees. And similar funds that are offered by competitors have undisclosed or unlimited management fees. So always check that contract wording. The interest rate takes effect on March 31st each year and will remain in effect for 12 months. So let's have a look at a case study here on suitability with UL and a budget conscious client. So here we've got Harry. He's 35 years old, looking to get life insurance, first time in his life, wants to get permanent, but young and good health. But he's also budget conscious and worried about the cost of insurance rising as he gets older. So great feature for Harry with our UL. Our minimum face amount of $25,000 allows the client to own permanent insurance without necessarily breaking the bank. Great option for Harry, allows him to have this permanent coverage. He wants, while staying within his budget. Me kind of playing devil's advocate, I'd certainly ask about mortgage liabilities, other expenses, and maybe look to add a term insurance rider into the UL policy. Maybe a great idea there as well. Let's check out some funding flexibility with Manulife UL. So we've got Fernando. He's an artist specializing in large landscape paintings. So much like everybody on the call today, he works entirely on commission. Has a great annual income, but the income does vary greatly month to month. Great feature of Manulife UL gives him the flexibility to put extra funds into the policy when he's flush with cash and gives him the ability to take a little bit of a payment holiday when he's short on cash. So for Fernando, he can add extra funds when he gets paid, but doesn't have to worry about the monthly premiums in those months that he may not be selling anything as well. So some great funding flexibility for Fernando. Again, Vitality Go free of charge, no minimum face amount, not mentioned anywhere on the policy contract, but still getting that smaller basket. UL with Vitality Plus, again, $6 per month, guaranteed savings of premiums at 10%. And then the minimum insurance is 100,000 for the face amount of permanent there on Vitality Plus. So again, why maybe consider Manulife UL? I focus on a lot of the performance advantages up to that 1% added to that rate of return on some of those same managed accounts that are offered by some of our competitors. All the contractually guaranteed, unmatched in the industry. And then, a lot of those managed accounts that you're already accustomed to utilizing with other carriers, all linked to those award-winning managers, also monitored by iWatch there, of course, as well. All right, let's talk our second permanent product. That's our Manulife Par Whole Life product. So really, little differentiator between UL and I guess on the whole life side, PAR is going to be a great opportunity if we're looking at more of those larger estate planning cases, clients that are looking to build that legacy, business owners looking to grow and expand, looking possibly maybe to leverage some of the great early cash values, whether it's collateral for a bank loan or an insured retirement program strategy in retirement years to supplement income. Maybe it's an immediate financing arrangement to, get more out of their business dollars, their retained earnings, and be able to utilize some of those funds for growing and expanding their business. Great fit depending on the cost structure for individual clients and corporate clients as well. But today we'll touch more upon some of the great Manulife advantages that we have within our PAR product, of course. So very similar to the universal life as far as the coverage types, the underwriting classes. You'll see a couple more riders here, and then we have our dividend options, whether it's paid up insurance or cash option. And then you'll see here we've got 4 different cost structures. So we have our pay for 10 years or pay for 20, pay to age 90, or our pay to age 100 as well. So, Manulife Par was designed and streamlined to build really early cash values for our clients and not necessarily, losing anything on the death benefit. So, you know, we wanted to have some great purpose designed with functionality for our clients. So, whether your clients are looking for more of those short guaranteed payment durations, 10 years of payments there. Very limited number of competitors offer that 10-year strategy. Great opportunity increase that MTAR room with a term insurance rider. Offset in a few years depending on that rider and some of the deposit option payments as well. Very popular duration with 20-year again. I always like to structure it very, very similar with deposit option and offset it after 10 years a lot of the time. Great way to increase that funding flexibility with our deposit option and the term rider to increase that MTAR room. Paid age 90, quite unique premium duration that's offered. Much more affordable premiums, letting you spread those payments over time. I use this one a lot of the time, even if I'm looking at like a juvenile case. I'll offset typically after year 20 in most cases, build up some great values for that child as well. And then, pay to age 100. This one is really built for those larger cases, those lending, leveraging opportunities for corporations or high net worth individuals. It was built to offer very high cash values without compromising on that long-term death benefit. In a lot of different case scenarios, we're seeing anywhere from 88 to 95% CSV and earning values in those early years, of course. So, great opportunities there. Some other additional features, of course, withdrawals, policy loans would be available there. Our great premium offset structure. I always like to focus on the ratings are only going to be applied on a portion of the base premium. Our paid up insurance and deposit option insurance are not rated, so that could be quite attractive and a better way to structure it, where you could, possibly throw on that term rider, increase the MTAR room, devote more to the deposit option if you want to save a little bit of premium dollars if there's possibly a rating there. The disability benefit, which we'll talk about, and of course, no policy fee there on our Manulife PAR product. Deposit option. So really, this is the most flexible deposit option in the marketplace. Clients will receive a lifetime deposit option limit. There's no extra underwriting required. Even if the client does not do any deposit option payments, or they illustrated it on the application, they will have some available to them, of course, as well. Years can be skipped. They don't have to commit to a 10-year structure, a 20-year structure. You could start, in a pay 20, I could do the first 3 to 5 years, take 5 years off, do another 5 years, stop, do another 2 years, pay it up after 20, and then still contribute to my deposit option there as well. Default limits, insurance up to 5 million, 10 times the standard base. 5 to 10 million, we're at 7 times the standard base. And then insurance amounts over 10 million, we're at 5 times the standard base premium. Deposit option payments will not be allowed when the dividend option has been set to cash. Client is rated more than 250%. If the policy is on premium offset, or policy is on reduced paid up insurance as well. So what if the deposit option is actively illustrated when underwritten? The lifetime limit will always be the greater of total of all deposit option payments illustrated, the default limit, and clients are not going to be disadvantaged if the illustrated payments are less than the default. They automatically get the greater of the two. Deposit option payments can be made after the end of the premium duration. And again, as I said, when the term section, term conversions can also get a default lifetime deposit option limit that doesn't require any underwriting. If they feel that default limit is not sufficient, they have the ability to be underwritten to request a larger limit. The annual and lifetime limits will always be communicated to clients on their annual statement. Every year, the maximum deposit option payment allowed is going to be determined by the lesser of the previous year's payment plus 100K, the available MTAR room for the year, or the remaining lifetime deposit option limits there. Our dividend interest rate. So actually haven't had a chance to change the slide. So we did just announce our rate go forward is going to remain at 6.35%. So this will stay in effect September 1st, 2025 to August 31st, 2026. Dividend interest rate for Manulife Par, it will remain at 6.35%. Every year, the announcement comes in July and effective from September 1st to August 31st of the next year there. The disability benefit. So really two ways to qualify, whether it's total disability or catastrophic disability. Certainly hope your clients never require it, but if they do find themselves disabled and in need of financial assistance, they can find comfort knowing that their Manulife Par policy comes with a built-in disability benefit provision. This will allow the client to withdraw their policy's cash value tax-free as per current Canadian federal income tax laws and regulations from January 2017. And the disability benefit does have a 30-day elimination period. Only one payment may be received per 12-month period. Now, because the disability benefit is withdrawn from policy's cash value, the death benefit will also be reduced every time your client receives a payment at that point. So great built-in feature, again, hope your clients never need it, but great that it is included. So since launching in 2018, we've always wanted to continue raising that bar for participating insurance products. And with whole life, your premiums, your initial death benefit, and your guaranteed cash values are typically only going to be the only guaranteed components. So this enhancement is a fourth guarantee that we made a few years ago, which is the cost to purchase paid up additions and deposit option will now be guaranteed. So really bottom line, it's a stronger product. Manulife Par clients will benefit from a more predictable product, and the Par contract contains one more guarantee than the competitors out there as well. So let's look at a couple case studies here. We've got a dental student. We've got Tim, 24 years old, purchases $1 million in a T20. Manulife, we can offer accelerated underwriting, e-application, e-delivery, easy way to get the policy done. Let's fast forward 20 years, and now Tim has a need for permanent. So let's convert $1 million to Manulife Par. We'll set up a 10 pay. This will create 518,000 of lifetime deposit option limit, and there's been no underwriting and no worrying about the net amount at risk. 10 years later, Tim's received an inheritance of 500,000. He has the option to deposit it into this whole life contract, and he has paid up additions, paid up insurance without any underwriting. So again, why Manulife? It's that complete electronic process. That original sale was issued without any medical evidence of insurability due to our accelerated underwriting features, had those great conversion options, and now he also has the ability to overfund a whole life contract being non-medical as well. So great opportunity there for Tim. Next one, let's look small to big. So we've got Samantha, 31-year-old manager, owns her home, married with two children, and lucky Samantha, she's got wealthy parents. So she's going to purchase $100,000 in a 10-pay Manulife Par. She's also added on a $1.5 million T20 insurance rider for term. This creates 54,000 in lifetime deposit option limits for Samantha. As we fast forward 18 years, she's inherited $1 million from her parents. So now she's decided to complete a partial conversion of the 1.5 million on her Manulife Par plan. So a 20 pay Manulife Par, she's choosing 500,000 of permanent, 500,000 in a T20 insurance rider, and she's going to leave $500,000 on the original policy. Now she has a new lifetime deposit option limit of $207,000. So again, no underwriting for this conversion sale. She gets paid up additions, paid up insurance. Again, you as the advisor get full premium on the new permanent sale there as well. So again, Vitality Go, again, our free version, par with Vitality Plus, only offered for the Vitality dividend with our pay 10, pay 20, and pay to age 90 structure. So there's no premium discounts on this. And as you can see there in the box on the right, the premium duration will determine the monthly vitality charges there as well. So it is a little bit different than our traditional $6 on UL and term insurance. So why consider par? Someone really looking for those high cash values later in life, that emphasis on the estate planning, and clients that are a little bit more comfortable with less guarantees and less transparency, but have that stable cash flow and looking to fund significantly those first 8 to 10 years there as well. Let's look at our last product on the life insurance side, our Manulife Guaranteed Issue Life. So really, as part of our broader strategy, trying to strengthen the mid-market product shelf, we launched Guaranteed Issue Life back in November of 2024, and this has really been designed as a simple, accessible product. Target markets are going to include individuals having trouble qualifying for life insurance, like our term insurance or UL or PAR, looking at final expense planning, looking for that convenient, fast application approach. But I'd say most importantly, it's really that plan B. Whether they've applied for term insurance or awaiting outstanding medical testing, and maybe their term application was postponed and you want to get something in place for the client. There are absolutely no medical questions asked with our guaranteed issue. It is completely guaranteed to issue. You can see here it's whole life permanent. There's not going to be any cash surrender value. Single life coverage only, not offered for corporations. Minimum face amount is 10,000. Maximum to age 70 is 100,000. Maximum to age 71 to 75 would be $50,000. Guaranteed level premiums right up until age 100. And then if they survive age 100, they're no longer paying the premiums in that sense. Pretty standard 24-month rule there. Death within the first 2 years. If it's accidental death, we will pay out accordingly. If they're dying for any other cause, including suicide, they're going to get that premiums paid into the policy there, of course, as well. Just access to Vitality Go, nothing available on Vitality Plus in this sense. Premiums fairly straightforward: age, amount, sex, and smoking status. There are no substandard ratings. Again, I'll focus on that impact of underwriting because there's no health questions. The cost of guaranteed issue life is going to be higher than other types of life insurance. If your client is in that good health, definitely consider a more affordable option like term life insurance there as well. So pretty straightforward as far as the application process. You get a quote on our rates to go. You submit electronically through the advisor portal. Clients can sign all documentation electronically, and then the client has the ability to register for our secure site in order to view all their policy documents online there. Very quick and easy application process. So let's look at some suitability, getting the coverage regardless of that risk, of course. I don't know if anyone remembers Susie from our term example. Well, it turns out, unfortunately, she is uninsurable due to risk and health and medical history. You know, not getting her the $1 million that she needed, unfortunately, but because there are no medical questions on the guaranteed issue life insurance app, you can offer her that permanent insurance regardless of that insurability. It is guaranteed to be issued. So really, again, I'll stress, the convenience, the application process, of course, with guaranteed issue life, no medical questions, really that plan B opportunity as there's no medical questions asked whatsoever. Okay, let's move along to our living benefits suite of products. We have our Life Check Critical Illness. A lot of different cost structures there, T10, T20, level to 65, level to 75, and then our term life solution there as well. You'll see application ages, coverage expiry dates there, of course, as well. And then coverage amounts, whether it's that minimum face amount of 25,000 or maximum of $2 million. You'll see we have a few different return of premium options on the T10, T20, and primary to 65. We've got return of premium on death, return of premium on death across the board there. Return of premium on expiry with primary to 65, level to 75. And then we also have return of premium on surrender for level 75 and term life as well.